Okay, welcome everybody. Let's do a little sound check. Somebody give me a thumbs up if they can hear me okay. Okay, I got several. Okay, terrific. So we got audio good. Let's see. Need to make sure that, and I just hit the record button, so that's great. Let me pull up my chat feature here. And okay, can somebody say something? Can I hear you? I'll pick on Fiona. Fiona, can you it's, make some noise?
Did you get my email?
Oh, terrific. Yeah, I can hear you. Yeah, I did get your email, and I haven't had a chance to look at it yet. Maybe that's a good place to start. It was about the proxy assignment, right? Yeah. And if memory serves, you're just kind of asking for some guidance around if you had covered everything. And let's reserve some time in class tonight to talk about that. I had another question about come in over corporate governance, so I want to make sure that we reserve some time in class tonight to navigate out to the Thomson Reuters site, show everybody where they can find that file, and the syllabus said that it was due tonight, but if you were able to join us last week, I mentioned that there's no penalty for taking another week to get that in. There's no penalty for taking another month to get that in. The syllabus is really just the guide. If you stay on track and get all those assignments in when the syllabus says to get them in, that's an accountability tool more so than it is anything else, and it's going to keep you on track in the course, and it's going to make sure that you also have the kind of the modules completed and as we go through the class as it relates to your assignment, your semester-long research project. So if you weren't able to join us last week, make a special effort to go out there and watch the recorded YouTube lecture, and you'll get a lot of great information about how I set up the class, how I grade. We went through the whole syllabus, so there's a bunch of information out there that you'll need, so please check that. And then as you do, I posted an announcement to our Canvas site last week with a link to that YouTube page. As you go out there and you're watching that, if you find something of interest, and I think, this might have been you, I forget. When you go out there and you find it at the, say 25-minute and 30-second mark, put that in the comments so that when everybody else comes back and they want to hear me talking about how to access this file or that file or how this assignment works or guidance on anything really, you'll be able to check the notes and the comments field on that YouTube site for somebody else that might have already been ahead of you searching through one of the past lectures to find the information that you need. Then you'd be like, oh, great, I just got to go to minute number 43, and that's where he talks about whatever I want to know about. So we'll talk quite a little bit about that research project tonight. I'm going to go through and give you a tour of the databases that UMKC makes available to you and give you some guidance on how to get started, because in the next couple of weeks you really need to get started on collecting all of the source files you'll need to write that, and take questions about proxy and anything else, and then lecture a little bit on Module 2. But we'll have a lot of time tonight to go in any direction we want to go in, because Module 2 should be 100% review for everybody in this class. It's an overview of financial statements, which is really the prerequisite. I mean, that's straight out of your accounting prereq. What is a balance sheet? What is an income statement? Talk about the statement of cash flows, the statement of shareholders' equity, what type of information that they have on each statement, how they work together, and then we'll go into kind of the basic accounting cycle, adjusting and closing entries. So I will only be hitting the highlights tonight. Happy to take questions, but this should be review for everybody. If it's not review, if you feel like you're really struggling with this material, then let's get you some help outside of class, because the class is going to get very technical very fast, and you will get buried in the material that we're going to be covering here in a few weeks. And there was something else on the tip of my tongue I was going to say, and I just lost that thought. It'll probably come back to me. Oh, the other thing I was going to say is that if you haven't had a chance to check out the site that comes with our textbook, mybusinesscourses.com, that's where I'm posting the homework, but that's also where you're going to find a bunch of other great information, including lectures. So if tonight is not coming easy for you, if the basic accounting is, if you're just a little rusty on it, then go watch those lectures that supplement this course material. They're excellent. I mean, they do, in many respects, they do a better job than I do. I'll try to cherry pick some of the information that can be a little bit more technical from each chapter and add some color to the extent I can, bring some real world examples. But those are a great source documents, source videos to bring yourself up to speed with.
Can I ask you a question real quick?
Yeah, please.
So I missed last class because I was enrolled. I wasn't enrolled yet. So did you just say that I could still do the homework that I missed?
Yeah, you can still do the homework that you missed.
Okay, thank you.
Go watch that first class. If you have any questions after that, no problem.
All right, thank you.
I'll get you caught up. But basically, that first class is just me saying I'm lazy and I'm not gonna count off anybody getting homework in late until the end of the semester. You'll learn how I operate. It's really pretty amazing.
Yeah, I appreciate it. Thank you.
Really pretty amazing. I've gotten this far in life.
I have a question for you, Pastor.
Okay, other questions. I like to start every class off with time reserved to answer all questions, because it doesn't matter how stupid your question you think it is, it needs to be asked because it's not stupid. It's probably something I forgot to say, or it's something that somebody else is struggling with. So you do me a great favor by having the courage to raise your hand and ask questions as a group. So fire away before we get started.
I have a question, Doctor.
Yes, sir.
Yes, is the homework is still available? I need to just enroll in this class, and I see there is one homework we have to do, and it's still available, or we have to reorganize it for us?
Okay, your audio came through really garbled. I know that you were asking about homework, and you asked about one that we had to do. Did
Yes.
you catch that?
Yes.
Okay, let me take you out to the homework site and see if I can answer your question. So this is our class site, the mybusinesscourses.com. You come out here, it should look something about like this. And your homework that's was assigned for module 1 is right here. You'll click on that. And well, we've had 23 attempts already, so it looks like most of the class had an opportunity to take it. And well, look at that. Everybody's aced it. So that tells me that we're doing a good job. It wasn't terribly difficult. Everybody's on schedule. I know the problems I put in there, so they're designed to cover the material. And like I said last week in class, I want you to get those points. So that's terrific. Now, tell me again what your question was. Were you having trouble navigating to the homework?
No, actually, I got it right, but I'm just asking, is it still open?
Yes, and it will be all semester. You can come back and take any one of those homework modules again at any point in the semester, and you may want to come back and review them before the exams too.
Thank you.
Yeah, do that homework as many times as you want. It does not average your grade. It takes the highest grade you submit. So that's another benefit of the homework. You'll see module 2 has been posted out there for you. Okay, other questions?
Yes, I have a question actually.
Yes, sir.
This might just me being lazy, but is there any possible way that you could include a link to my business courses on like the home dashboard? Instead of having to go through the syllabus.
I probably could do that. Yeah. I mean, now it's your laziness fighting my laziness. So we'll see who wins that battle.
Okay.
If I'm in there, I'll try to remember to do it.
All right. Thank you.
You were able to find it though, I gather, through the syllabus.
Yes.
Okay, good. Okay, well, since everybody was acing that homework, I'm gonna assume that we didn't have any trouble with that. And I'll take that as an opportunity to move into lecture 2.
I had a
Professor,
relatively simple trouble with something.
Yeah, fire away, James.
I couldn't figure out how to get the beginning cash for some reason. I don't know.
Well, let's see, module 1, homework. Continue last preview. Okay, what's the beginning cash?
In the statement cash flows.
Is it the next problem or this problem?
It's in that problem right there. So statement of cash flows after you do all of your cash from activities, and then you have to take the beginning cash balance, and then add the
Were you able to get the beginning cash balance?
that's what I was having trouble with.
You were having trouble with that. Okay, so we know the cash at the end of the year. So if we know the cash at the end of the year, we should be able to kind of work into it backwards, so to speak. If you know the beginning, then you just add the cash from operations, you add the cash from financing activities, and you add the cash from investing activities, and you end up with the cash at the end of the year. But if you don't have that, you can start with the end of the year, I suppose, and subtract those 3 to back into it. So here's your 3 components on the statement of cash flow. These are the numbers that you're working with. And so if you use those numbers, you should be able to find it. Now, let me give you guys some more, a little reminder here. This is question 1 out of, looks like it's marked out of 39. Okay, so here's another reason why you should always get the homework correct, which is if you come over here to our dashboard, click into our course, go to, I think it's modules, come down here and you have solutions manual. Financial statement analysis version 60 solutions manual. Click through to that. You're going to download it. I already have it downloaded, unzipped over here. So I'll come over here to solutions manual. It's a big file, so it takes a minute. Let me pull that over so y'all can see it. So here we are, solutions module 1 revived. So these are the answers to all of the questions in module 1. And
Okay.
did somebody have a question there?
It's not showing on your screen.
Oh, okay, well, stop share. Let me share again. Screen 2. Okay, now can you see the solutions manual?
Yes.
Okay, great. So I think that was question 39, maybe. Well, it doesn't look like it, so let's go back there and see. Bear with me here. Okay, now I'm having some technical difficulties. I can't get my screen to stop share. Zoom meeting. Well, James, I apologize. I was gonna Um, Do you guys see a big black ribbon at the top of your screen right now?
Yeah, the whole screen is black right now for me.
The whole screen. Okay. Okay. I'm going to share my other screen then. Okay. Now. Okay, so here's the solutions manual again. So now we have to use this solutions manual to figure out what question that assignment on Canvas or that assignment on My Business Courses was referencing. Sometimes the numbering gets a little off. That was the first question in the homework, which I don't know, might have been 20 or 30 at the end of the chapter. But if we can figure that out, then we're going to be able to go directly to that question in the solutions manual, and it's going to tell us where we went wrong. So that would be my guidance to really everybody in class, is if we use this right, and we're struggling, we should never have to feel like we're beating our heads against the wall, because we know the answers out there. We just have to find it in the solutions manual and then go figure it out. Okay, so now I'm going back to My Business Courses here. I got a little off track with my IT here. Okay, module 1. Let's look at that question again. So this says marked out of 39. That's why I thought it was question number 39. But let's see if we can maybe preview that question. So this is a statement is asking about General Mills, and we want the income statement first there. So let's close that, and let's just do a control find for General Mills. So M25 is giving us, that's a comparative financial statement question. So let's toggle let's keep going in search of General Mills and see. Here we go. This looks like what we're looking for. This is problem 1-44, which is budgeted to take you 30 minutes. We have the income statement of General Mills, we have the balance sheet of General Mills, and we have the statement of cash flows. And that looks like the cash at the end. This is the same number from that problem. So this is the right one. We've just found it. It took a minute, but so now, James, you can see how they used the net increase and decrease in cash that they calculated from those 3 activities to kind of back into the cash at the beginning of the year. So
that's a brain fart on me, because now that I'm looking at this, I never attempted to put the cash from the balance sheet as the actual cash at the end of the year. My bad. I just did this like 30 minutes ago, so that's my fault.
no problem whatsoever. It was a good exercise to go through, because everybody needs to know that solutions manual is out there, and everybody needs to know how to use it. Now, these questions are designed to be algorithmic, which means that the authors are going to switch up the numbers that are in the questions that they show you for the homework. Otherwise, it's just really kind of stupid. I mean, I'm not trying to give everybody in the class busy work, but I'm also not trying to make this the most challenging course you've ever taken in your MBA program. So the answers are out there, but they're not supposed to be the answers. They're just supposed to be templates that help guide you with regard to how to get the answer. So in this instance, looks like the numbers were nearly identical, but in the next instance, I've asked the software to vary those numbers a little bit. So anyway, thanks for answering the question. I hope that helps everybody in class know how to use that solutions manual. Okay, anything else? Okay, okay, I've pulled up the PowerPoint. James, can you see that okay?
No.
Okay, how about now?
We can see you
There
swimming.
you go.
There we go. Okay, thank you. You'd think this was the first time I've ever used Zoom, but I've actually been using it pretty consistently for about 6 months now. Okay, examine and interpret a balance sheet. Like I said, this should all be pretty basic stuff. So I'm going to fly through this material, gang. If you want me to slow down and take anything in this chapter a little bit slower, just raise your hand and say, hey, can we spend a little bit more time on that? And I'm happy to pause. But when it comes to a balance sheet, and our authors are starting off with the basic accounting question, I tend to think, oh man, we're starting with the absolute basics of accounting. So, and I don't mean to belittle anybody. If you need a review, that's cool. Go to my business courses site, and they got some great videos. But at this point in your curriculum, as you get through the block school, that assets equal liabilities plus stockholders' equity, you should be familiar with that. Balance sheet is the basic reporting of that. It's at the end of the year. Companies move through their accounting cycle, and usually December 31st. It doesn't have to be December 31st. Your fiscal year could end on August 31st or September 31st. But at that point in time, we're going to create a balance sheet, and it's a general accounting of all the assets that we own. And you're going to see that offset against all the liabilities that a company has taken out. And the difference between those two things is how much capital the owners have contributed. And the owners could be shareholders, they could be members of a limited liability corporation, they could be partners of a partnership, and that ownership all takes different forms, and you're going to see a breakdown of that ownership on the statement of shareholders' equity, and we'll talk about that later. But in this chapter, and the book does such a great job of this, the book shares financial statements of some of the largest companies in the world. We were just working with General Mills and that last problem, and in this chapter we're working with Apple, and you can see Apple's balance sheet here as of 2018. This is in millions, yes. So they had total assets of 725 million. So what is that? 365 billion, 725 million, which is just incredible. And in the 2 years since, it's nearly doubled. Apple's an amazing company. Apple's up 50% just this year in an environment where we have COVID-19 that we're struggling with, and unemployment's at a near all-time high, or at least as high as we've seen it in 100 years. Apple is carrying the stock market on its back this year. To see a company as big as Apple is double in size, it's just unbelievable. They had $1 trillion market cap earlier this year, and then they doubled. So now they have a $2 trillion market cap. Largest company in the world, or maybe second to Amazon. I think they flip-flop back and forth. Can't remember which one's bigger now, but it's really quite incredible. And that's what their balance sheet looks like. Look how much cash they have. Cash and cash equivalents, 25, almost 26 billion dollars in cash. And then the short-term market securities is another 40 billion. Well, short-term market securities that might be CDs or commercial paper or some place you park cash so that you can earn a little bit of a return on it. So it's not cash, but it kind of functions like cash. So 40 plus 26 is $66 billion in cash. And that was 2 years ago. So add another, 20 or so billion in cash just then from their profits. And you're looking at a company with almost $100 billion in cash on their balance sheet, which is incredible. That's 100 billion is another large cap company just in cash. So, if Apple was the company that you had chosen to do your research project on, that would be one of the big questions that you would want to find out about this company. What are they doing with all that cash? And that's one of the big questions you want to find out about, whoever you're analyzing. You want to understand their balance sheet. You want to understand, obviously, their income statement and statement of cash flows as well. But what a company does with its cash tells you a lot about the strategic thrust of their business model. Are they, well, first off, are they cash rich or are they cash poor? Because if they're cash poor and they're struggling to generate the cash they need to service their debts and to advance their business and compete with the rest of the industry, well, that's a problem you need to be concerned about. And you need to be questioning management on, how they're going to rectify the ship. But if they're cash rich, like Apple here is, well, you need to be asking the management team about what's their plan for all that cash. Are they going to be using it to invest in mergers and acquisitions? Are they going to be advancing into new markets? So they're going to be expanding upstream or downstream inside of their value chain. Last week we talked about SWOT analysis, and we talked about Porter's five forces, and we talked about some of the competitive dynamics that affect all industries. Well, those same dynamics ought to create opportunities for a company like Apple to invest their cash. And your job as the analyst is to understand that so that you can write a research paper so that I can read, but ultimately so that you can figure out whether or not you want to invest your hard-earned cash with this management team so that they might be able to go out and compound those returns for many years into the future. Okay. Our authors give us a detailed look about at what goes into the balance sheet. The basic categories are current assets, long-term assets. Nothing unusual here. So this is an interesting chart, and it's worth pausing just so that we all have a good understanding of the difference between stock price and book value per share. I mentioned what a juggernaut Apple is. Well, you can see their stock over the last 10 to 15 years. It's been just an incredible ride for investors. And then, like I said, it's doubled in the last year. So it's way up there. This is a $250 stock price, and it's well in excess of that now with stock splits. But look at their book value per share. What is book value per share? This is one of the things I don't like about Zoom is it's hard to get much interaction, but if somebody wants to chime in and take a stab at book value per share, they're welcome. Well, book value per share is what drops to the bottom line of your income statement every year and then is ultimately added to the net earnings or retained earnings that shows up on the balance sheet. And as that accumulates month after month after month, quarter after quarter, year after year, you see a rise in the book value. Well, it's obvious from this chart that the stock price has been moving up well in excess of the book value. So what's this gap attributable to? Why are investors willing to pay so much more for Apple than its book value would justify? Well, there's only one good answer to that question. It's that there has to be a lot of value in this stock that's not reflected in the book value. So what is not on the balance sheet that's worth this much money that justifies that gap for a company like Apple? Any guesses?
Intangible asset.
That's a pretty damn good guess, and it's 100% right. Everybody in the world recognizes that little Apple. It's one of the most widely recognized brands in the world, and that's worth an absolute ton of value, because when you bring a new product to market and it's got that little Apple on it, people know what to expect. They naturally flock to the known versus the unknown. And between that and the ecosystem that they've created and all the data that they've harvested on everybody in this class and all of the contracts that they've written into. Did anybody see Fortnite sued Apple this week? That was kind of an interesting little lawsuit. So I think Apple charges 30% of all the in-game revenues that are collected from anything on their platform, which seems high to me. 30%, just to be listed on their platform, you're going to pay 30% of in-game revenues. And I've never played Fortnite. I don't know how it works, but I know it's a big deal with kids my kids' age. I have 4 daughters, and it seems like my 6th graders are real into Fortnite, or at least her friends are. So they must be collecting a ton of in-app money, and that all goes to Apple, and it's all contractually obligated to go to Apple. And if you don't want to pay it, well, you don't get to be on the largest app platform in the world. So I'm anxious to see how that lawsuit turns out for Fortnite, but I'll bet Apple wins it. Okay, liabilities. You all know what liabilities are. You buy, it's like you buy a house. You have a mortgage on the house. The mortgage is your liability. These are standard ways to fund a business. Most businesses have some debt on their balance sheet. Most businesses will incur loans from the bank, or maybe you have a debt outstanding to one of your vendors. If you're a manufacturing company, you might borrow money to purchase your inventory. There's all kinds of different reasons why you might put some debt on your books, and it shows up as liabilities. And not just that, but you can owe money, or you can owe goods, or you can owe services. All of those are liabilities. Now, most of the time, your liabilities are going to come in 2 big chunks, short-term and long-term. Short-term is what you run the business with. So your working capital and your accounts payable and your wages payable, and maybe some other pretty common line items. And then your long-term liabilities are going to be your strategic borrowings that really power the growth and ops of your firm. And those are usually coming either from the bank or from the bond market. And we'll spend a whole module, I think it's module 5, talking about the bond market. And then lastly, shareholders' equity. I mentioned that a moment ago. And then you can see Apple's total balance sheet here, or at least the liabilities and equity side. They have total liabilities of $258 billion. And about half of that is long-term debt, long-term liabilities that they've taken out from the marketplace. Here's long-term debt. I guess that's 93 billion. And then I would wonder what these other liabilities are then. If it's not long-term debt, I don't know what that is. But you can find out what that is if you go get their 10K filing, which we talked about a little bit last week. That'll be on their investor relations website, or you can get it through the sec.gov. So go get that 10K filing, and then there'll be a whole bunch of detail in the fine print. You just go to whatever note it is, and it'll break it down by individual issue. Every time they've ever made a borrowing, you'll probably get details on who the lender was. And this is a big one. Not only do you get details on who the lender was, you're going to get details on any of the covenants associated with that debt. And a covenant, just think of a covenant like a string. If you borrow money, it's going to come with strings attached. Well, any bank is going to put strings on those borrowings, and those are usually rules that you have to play by if you agree to take the money. So to the company that I work for and part own, we have a loan outstanding from the bank. And when we borrowed some money from the bank to grow our business, the bank said that we had to keep our debt coverage ratio above 4 times. So they get our financials on a quarterly basis, and they look to make sure that we're making enough money. And as long as we are, they don't ask any more questions. But if we should ever fall below a certain threshold, there might be a difficult conversation. And if worse came to worse, they could call that note. And not only could they call that note, but they could call the collateral that we use to back it with, which in this case were our individual home mortgages. So that was a personal note that we all signed. Okay, moving on. Okay, I want to come down here and talk a little bit about the operating cycle. Our authors talk quite a little bit about the operating cycle, and it's really just how fast a company can turn cash from inventory to sales or accounts receivable, and then back to cash again. You'll see this referred to as the cash conversion cycle. A company like Apple can do this really quickly. A company like Jacobs Engineering that builds nuclear plants, this cycle might take 5 years because those construction projects are just absolutely huge. So when you're doing your competitive analysis, just be mindful of what industry that your company operates in, and that'll give you some frame of reference for what kind of operating cycle / cash conversion cycle you're dealing with. So here's a comparison between Apple and 3M. You can see each one of them is calculated here. These are the major components. You take average days sales outstanding, add that to average days inventory outstanding, subtract off the average number of days your payables are outstanding, and that gives you your cash conversion cycle. Notice, importantly, that Apple has a negative cash conversion cycle. You don't see that very often, and it gives you a little window into just how powerful Apple is. If you're viewing that through the lens of Porter's 5 forces, like we talked a little bit about last week, that would be the buying power that they have over their vendors. And you can see there that their average days payable outstanding is 111. Their average days sales outstanding is 28. So think about this, 28 days is the average number of days that the people who buy from them, so I guess that would be the retailers of the world, take to pay them back. So they get paid back from their accounts receivable in about 28 days. And then they take that cash and they sit on it for another 90 days, and then they pay their vendors. So all of their original equipment manufacturers that are over in China, they get paid more than a quarter later. And when a company's as big as Apple is, you're dealing with billions of dollars. So that's a multi-billion-dollar interest-free loan that Apple has been able to lend themselves, I guess you might say, because of the way that they've structured their business. And that's called a negative cash conversion cycle, and it's not something that you see every day, but it's really impressive and takes a real strong business to do that. 3M's a little bit more typical. Cash conversion cycle, 101 days. This is a manufacturing firm. Nothing out of the ordinary there. The comparison just gives you really an idea of how strong Apple is, not necessarily how weak 3M is. Okay. I want to talk about analyst adjustments and common size balance sheets, but to do that, I'm going to use slide number 26. So this is called a common sized balance sheet, and this is a tool that analysts will use to gain some insights about how well a company's been performing over the last couple of years. And it allows you to very quickly identify trends in some of the major line items that a company has on its balance sheet and how they've been moving in relationship to other line items for the past few years. So what you do is you take each one of these individual line items, so you take current assets, and you have cash and cash equivalents, and you're going to compute that as a percentage of total assets. And then you're going to go back and you're going to do that for 18, 17, 16. You know, if you have a spreadsheet, you might go all the way back 10 years or so. And then you can graph those, and you can see that over time, this is for Boston Scientific we're looking at here, you can see that over time, Boston Scientific, you know, their cash has been 1.1% of their assets, 1%, 0.7. That's all in a pretty tight range, so probably no cause for concern there. But you just pan your eyes across each of these, and you can see that total trade accounts pretty flat, inventory's pretty flat, prepaid income taxes. Okay, look at that. Prepaid income taxes went from 0.4 to 0.3 to 0.8, so more than doubled. Now, prepaid income taxes isn't a very big line item, but it went from 0.3 to 0.8. So to double like that in a year, something's going on there. So I would go to the back of the 10K filing and read the note associated with prepaid taxes for that year, and you're going to get a ton of information from the management company about what's going on there. So that's just a good way to prepare your balance sheet to get some more, a different perspective on it. Absolutely do this for your research project and go back as many years as you can. Morningstar will do this for you, so it's not a heavy lift to make this happen. You really just have to find it and cut and paste it into your research report. Okay, now we're into the income statement. For most of the semester, our authors are going to be using a manufacturing firm to illustrate most of their points, and the income statement for a manufacturing firm generally takes on this form. You start with revenues, less cost of goods sold to get gross profit, and then you have this huge catch-all operating expense line, which takes you down to operating profit. You'll also hear this referred to as EBIT, or sometimes EBITDA, if they break out depreciation and amortization. Technically, that's not a GAAP term, so be mindful of that. If you hear EBIT or you hear EBITDA, it's not governed by GAAP, which means that management teams may have made some corrections for what actually flows into there. And make sure you know what those corrections might have been. Otherwise, you could get a little off course using some of those numbers. But that takes you down to earnings before discontinued operations. Then you may or may not have discontinued operations in your income statement. If you do, note that those will be net of tax. Those are always reported net of tax. And then lastly, net income. Okay, well, here's Apple again. You can see that's the same basic layout of their income statement. You can see in 2018, they made almost $60 billion worth of profit. So just absolutely incredible. I speculated there a couple slides ago that between 18 and 20, they probably made another 100 billion. So I wasn't too far off. I'll pause here on the revenue recognition principle. We'll go into this in more detail in module 6, I think. But this is a big deal. We need to have a good understanding of when our companies recognize revenue, because there's a matching principle associated with this, and there's also a revenue recognition principle which says that we want to make sure that we don't recognize that revenue until the good or service is actually delivered and earned. So we have to have performed whatever obligation it is or whatever service it is that we're in business to perform. And until we do so, we can't rightfully recognize that revenue. So we'll talk about sales returns and allowances and warranties and other obligations that can affect the sales that we actually post to our income statement. And that's called quality of earnings. And quality of earnings is a topic that I want you to be familiar with as we move throughout the semester, because erring on the conservative side of a lot of these accounting estimates that we'll be talking about this semester can produce a stronger income statement. And when I say it can produce a stronger income statement, I mean you can have more confidence in it. You can have more faith that those numbers are real and they're not going to evaporate on you. There's a lot of accounting shenanigans. There's a book that I love called Shenanigans that is all about some of the tricks that management teams use. And I think one of them is called, we'll get to this later in the semester, channel stuffing or cookie jar accounting. If you want to pad your sales lines, you can run huge sales with money back guarantees. And whenever you run a money back guarantee sale, you're going to pull a lot of sales into the current period. So yeah, you're going to sell a lot of stuff, but chances are your sales returns and allowances are going to go way up too. And if you don't account for that, that results in lower quality of earnings. So we'll touch on that throughout the semester. Okay, common size income statements. Just like we prepared a common size balance sheet, I want you to prepare a common size income statement. And again, when I say you prepare, I really just mean you find, because Morningstar should have all this. But in this case, we're taking every line item on the income statement and we're presenting it as a percentage of net sales. So sales as a percentage of sales is 100%. Cost of products sold as a percentage of the sales is 28. So then the exercise becomes monitoring this trend over time, and you can see that for Boston Scientific, that's been 28 for the last 3 years, so kind of a steady Eddie there. SG&A expense, pretty steady. Research and development, right at 11%. Royalty expense, I'm not seeing anything big jump out. Here's an intangible asset and impairment charge. Looks like that presented in 18, so I don't want to know what that was. But everything else seems like it's pretty much in line, which is in and of itself unusual because most of the time you'll see some variance in these numbers, and as they jump around a little bit, that's your cue as the analyst to go do some digging and find out what's going on there and make a list, because as you're going through these exercises for the next few weeks, you should be compiling a list of questions that you'd like to have answered. And then as you begin reading through some of the analyst reports, you'll get answers to a lot of them, but not all of them. And later in the semester, you'll have the opportunity to reach out to management teams and ask them. You'll be able to call them up on the phone. Okay, statement of stockholders' equity. Let's look at that for Apple. Nope, that's not it. Here we go. Statement of stockholders' equity. So you can see how this statement is organized by the different classes of equity. So we have common stock and additional paid-in capital. Those are the numbers that show up on the balance sheet when you first form a company. You're going to issue common stock or partnership units or membership units, depending upon what kind of company it is. But for the purposes of this class, we're almost always dealing with publicly traded companies. So in that instance, we're going to issue common stock. And as with everything else, we'll take a deeper dive into common stock later this semester. But usually there's a par value associated with common stock. And a par value is some nominal, either penny per share or dollar per share, that's printed on the front of the stock certificates, back during a period of time when there actually were stock certificates. Today they're just electronic certificates. Nonetheless, they still have a par value. And then when the IPO is completed and all of the capital is raised, there's an additional amount in excess of that par value that companies always collect. And they record that as additional paid-in capital. So those two numbers are in this first column on the statement of shareholders' equity. And then we have retained earnings for any company that's been in business any length of time that's been profitable. They'll have retained earnings, although this number doesn't have to be positive. It can be negative. Then we have other comprehensive income and loss. And now you say to yourselves, wait a minute, if retained earnings is net income, then what is other comprehensive income or loss? And that would be a great question. And we're going to talk about that in detail later this semester over several modules, because there are things like pension benefits and losses, and gains and losses on foreign currency adjustments, and gains and losses on derivative accounts, and a few other items that can dramatically affect your financial statements that we're going to need to be aware of. And if you have any of those things going on with your research project this semester, then we're going to need to sift through that in a lot of detail and make sure you have a good understanding of exactly what that is. Okay, statement of cash flows. Let's look at Apple's. Here's Apple's statement of cash flows. So we have cash generated by operating activities, investing activities, and financing activities. Then we have the net change in cash and the cash balance at the beginning and ending of the year. And that is a very condensed statement of cash flows. You're really just getting the highlights when you look at it like that, which is exactly what the homework did from last week. And that's okay. But if you were to pull up their 10K filing, you would get a lot more detail about what actually is inside of this operating section of the statement of cash flows. And that can be meaningful, because we want to know what line items are on the statement of cash flows and on the income statement that might be accrual based. And when I say accrual based, I'm talking about things that we accrue for, like accounts receivable. We don't get the cash when we book accounts receivable, but we record the income. And as long as the cash comes in subsequent quarters consistently, we don't have anything to worry about. But if there's ever a mismatch between those two things, it should raise a little pink flag and cause us all as analysts to scratch our heads a little bit and pull up our 10K filing and go back to the fine print and figure out what's going on there and maybe have a conversation with the management team and so on and so forth. Okay. Apply linkages amongst the statements. I will just take you here and note that this whole chart is excellent. So if you have the hard copies of this, just star slide number 54. It's one of my favorite charts of the semester, and you can just kind of get a feel for how everything flows together. The balance sheet, you take that cash, just like the problem we were looking at the top of the class, and the cash on the balance sheet flows through to the beginning statement of cash flow balance. The statement of cash flow flows through to the cash on the beginning of the balance sheet next year. You can see the contributed capital shows up on the statement of shareholders' equity. Same way with the retained earnings. And it just gives you a feel for how all of the financial statements work together. And we call that articulate. So, and if you ever hear anybody say, how do the statements articulate? This is what they're referring to, which is how they all work together to explain the picture of a company's true underlying economic situation from one year to the next. Okay, then we're into accounting cycle. And I just briefly want to talk about adjustments. When you get to the end of the year, accountants, and you may remember this from your accounting prereq, have to go through a process that they call adjusting. And the classic example I like to use is that before we can actually publish financial statements, we have to make sure that we've accurately recorded all of the obligations that we may have accrued but not yet paid. And wages payable is a good example of that. Usually companies finish the fiscal year in the middle of a wage cycle. So if you pay on the 1st and the 15th or every other week, then get to the end of the year and maybe you owe your employees a week's worth of wages. Okay, so in that instance, you haven't paid them yet, but they're owed. So they should be a liability, but you haven't yet booked the accounting entry to make sure that they end up on the books. So you just add an accounting entry at the end of the year and it shows up as wages payable as the liability on your books. So you would debit earnings expense and credit wages payable, and that would be the entry to adjust your books at the end of the year. And there's all kinds of little accruals that may have similarly affected the financial statement that you'll need to go through. It's a little bit of an exercise. And our authors take us through several examples of that. And you can see them here on slide number 61. 4 examples of adjustments. We have prepaid expenses, unearned revenues, accrued expenses. That's the example of wages payable. And then we have accrued revenues. So I would just maybe encourage you to spend a little time with these if you haven't. This would be a good multiple choice question on the exam. I think it'd be a piece of cake. If you have slide number 61 starred, you'd have no problem answering that. But I'm not going to spend a lot of class time on it. And there's another, nope, that's the same slide. Okay, yeah, and then everything else in the module number 2 here, I have no, well, I have no real insights on it that I probably would add much to the class. Closing process, again, I'll review. By the time we get to the end of the accounting cycle, it's the accountant's job to go through and quote unquote close the books, which means that all of the accounts associated with the income statement are going to have a 0 balance at the end of the year. The only accounts that are still going to have a positive balance, or what we call the permanent accounts. Permanent is just another way of saying the balance sheet accounts. And then the last learning objective, we covered a little bit last week. Where do you go to find additional information? And we went to the SEC's website to get the Form 10K. Form 20F is for international companies, 40F Canadian companies, and then we looked at some Form 8Ks, which are generally press releases, significant events that companies have to file with the SEC, and that's Form 8K. So I'm going to call Module 2 quits right there, gang. Nobody interrupted me as I was going through that process, so I'm hopeful that's all review for everybody in class. Check the videos for a little bit more help there if you need it, but otherwise I'll assume we're all good there.
So how can we access the PowerPoint? Is it in Canvas or?
Sorry, I had my volume on my speaker turned up way too loud. You scared the heck out of me. Say, ask that question again, please.
Sorry. I'm talking about the PowerPoint. Is it available in Canvas or this PowerPoint?
Yeah, it's all on Canvas. Here, I'll show you where to go to get it. Okay. So.
Models.
There you go. Right there. Got it?
Okay. And
Right.
how about the Model 1 solution that you just open it?
Oh, yeah, that is right there too. Let me clear that. Where was the solution? There we go. Solutions manual right there. Got it?
Yeah, but for the homework, the general miles is not exist in this file.
Oh, yeah. Hold on. So you click on solutions, and then you're going to have to download that zip file. And we open the zip file, and module 1. Oops, that comes over here. I'm sharing this screen. So there's the file. There's the zip file, and that opens this one. And then you enable editing, and you have to go Control Find General Mills, and you search down through. There it is. That gets you to there. Cool?
Okay.
Okay. Okay. Okay, well, that brings us to an hour that I've been talking here. So let me run down real quick. I want to get I got to get some more ice water because I'm going dry. So let's take 5. I'll come back and I'll run you through a whole bunch of resources that you all have access to get you started on your research report. Take some more questions, and then that'll probably allow us to get out of here a little bit early tonight. So let's take 5. Okay, gang, let's get started here again. What I want to do next is take you out to the UMKC website. So you should be able to see that on my screen here. Somebody jump in if you can't see it, but I'm assuming you can. So if you scroll to the bottom of our homepage, you're going to see a link to libraries somewhere. Libraries, there we go. Right there, fourth one or second one from the top, middle menu, click on libraries. That's going to take you to Miller-Nichols. So click on Miller-Nichols. And then you'll want to click on articles and databases. If you come down here, here's the database link. So click on that. And it's going to take you out here to a huge list of university databases that we subscribe to and have access to, and there's just such a wealth of information out here. If you haven't been out here, then just spend some time, go deep. There's so many rabbit holes. This can really eat up some time. So I guess it comes with a warning too. Be careful. But for our purposes, it's just terrific. So you can query this a little bit by subject. So if we come in here, we can look at maybe we just want business. And then you can come through here and look at every single business database that the university has access to. And this is basically your project. You know, come to this link, narrow it down by business, and then click on every one of these. So here's ABI Inform. So let's go there and, well, let's log in. And then we just want to search. So let's find a company that somebody's actually interested in here. We'll go over to Canvas and look at our homework discussion board. No, that's not what I wanted. I wanted company selection form. So everybody should have come in here last week and picked off a company. Let's search for, Select Jimmy, are you on the call?
Yes, sir.
Okay, if you're on the call, then we'll do Starbucks. Might as well, right? Okay, so that's S-Bucks. So let's clear those drawings. So we come over here, we're in the database, and we want to search for Starbucks. And you can see here that it has brought up 24 scholarly journals. So you can see here 29 dissertations and theses, 2,000 newspaper articles, 400 magazine articles, and 1,000 trade journals. So it's way too much, right? You can't sift through all that. So you're going to have to narrow it down by maybe time period, maybe relevance, maybe if you're searching for a specific article. But there's a ton of good stuff in here. So that's your opportunity to kind of sort through. And here's an article that says ticker report, investors sell Starbucks on strength. So that's an interesting title. Let's click through there and see what kind of information we get. Okay, well, maybe there's some good stuff in here on why investors are selling Starbucks. It looks like they're talking a little bit about their growth rate and have something about the earnings report. And this might be a great source file for you as you're building your research report. So we can kind of click back, and that was just ARG. That was just one of the databases that we have available. Now, how do I get back there? UMKC. Libraries, databases. That's what I want. Okay. And I had searched by business. And I went to, so here's the second one, Business Source Premier. And you can look at that for accounting, finance, economics, marketing journals and magazines, Reference USA. This directory is millions of US businesses searchable by name. Click on all of these. You're going to get great insights. You're going to get great source materials. Here's one called Business Analyst. I don't know if I've even been in this one yet. That might be fun. My password's not popping up. I'm assuming that's my university password, so I might have to come back here at some point. And let me see if I can dig that up real quick. Well, I don't know what to tell you. So for that database, my university password didn't work. So in that case, I would just scroll on to the next database and see what else is in there. Go back to business again. And I want to point out a few that I don't want you to miss. This IBIS is a great database for industry reports. So if you're struggling with the competitive analysis, maybe SWOT, maybe Porter's Five Forces, identifying a good list of competitors for your industry, come to this IBIS world and print off the report for your industry. There's usually great stuff in there. Make sure that you don't miss that one. This Mergent is another one. I've always had good luck with that Mergent database, so make sure you check that. ProQuest is a good one, so check that one. A lot of these reference USA type business publications can give you good background information. If you go into some of these databases and you search by the name of your CEO, a lot of times you'll get great interviews, maybe some other journal articles that different publications might have done. Gives you real insights into the leadership that's at the helm of your company. That's one of the most important aspects of this class, is gaining a level of familiarity with just, you know, who it is that's running the ship, pulling the trigger. And then one of the most powerful databases, this Thomson Net. No, I'm looking for Thomson 1. Why is it not popping up? Maybe it's not under business. Maybe it's under finance. Nope, that's general. Well, let's just go to all subjects and then we'll go down to T. And this is the one, Thomson 1 Investment Banking. So somebody had a question at the top of the class about where we could get more information on corporate governance. And there's usually information in this Thomson 1 Investment Banking. Now you're going to click on that and you're going to see that that went nowhere. And the reason it went nowhere is because I am trying to access it from Google Chrome. And you can't get there from Google Chrome. You have to access it from Internet Explorer. So I'm going to try to bring up Internet Explorer. But Internet Explorer is not wanting to work for me. Don't know why. Okay, well, I guess I'm not going to be able to show you that tonight. That's frustrating. My first instinct is to reboot, but that's going to kick us all out of the Zoom class. So that's no good. What I could do is just reboot, and then I could just shoot another short little video and post it out there to YouTube. What's out there on Thomson 1 that's so helpful is all of the analyst reports. So if you go out there to Thomson 1, you're going to get professional reports that have been written by Morgan Stanley and Merrill Lynch and Deutsche Bank and Bank of America and all of the major investing banking firms that make a business out of investing banking. Well, they cover companies like Starbucks and Microsoft and Intel, and they make a business out of selling their shares to the public. So they employ Wall Street analysts, and it's their job to know everything about these companies. And you can find all of their work out there on that site. And it's a terrific opportunity to, well, first familiarize yourself with what Wall Street thinks about the companies that you're working on. But then secondly, just to begin to assimilate a lot of their work into our research. And as you do so, I'm hopeful that as the semester moves along, you'll begin to build a bear case and a bull case for all the companies that you're working on. And then ultimately an executive thesis that supports what you think about that company. So I apologize for my tech tonight. I'm going to recommend that I do that. Just film that short little tutorial after I reboot, and I'll post that to YouTube. And then if there's any questions, I can just address those offline. So
One thing to note there, the maximum concurrent users, I just tried to log in even on Internet Explorer and it wouldn't let me in. So I think there's a maximum of people on there already.
Oh, you beat me. Yeah, good call, Brian. There is, I think it's 20. So sometimes that site is a little bit difficult to get into. Just try it at different hours. And you should be able to, it might take you a couple times, but you'll get in there. But yeah, that's a good heads up. So what else, gang, before we call her quits?
I did have one question on the proxy.
Yeah.
I think last time we spoke, you mentioned that it was okay to cut and paste information from the actual proxy PDF from the company into kind of a Word file or whatever for our assignment.
Yeah, sure, absolutely.
Okay.
And when is the proxy analysis due?
Well, the syllabus says it was due tonight, but if you're not, don't have it in until next week or the week after, there's no points that I'm going to take off for it. So, okay. Don't stress yourself out about getting it in today. Just make sure that you have enough time to do the job, and then if you don't have it in until a week or two, that's fine.
Okay.
Was there a sample out there for what you're looking for that analysis?
No, I need to take one of a good one that one of you guys do and put it out there as a sample, but I just don't because it's not that big of a deal. Just make sure that you have the management team's salaries and how they get paid and what their incentive comp is linked to, and then anything else fishy that jumps out at you in the proxy, and you're going to get all the points. I mean, seriously, don't stress out over this proxy assignment. It's easy. Nobody's gonna miss any of the points on this proxy assignment. It's 40 points. Everybody's getting all 40 points. Just tell me how your management teams get paid. If there's anything in there on corporate governance or conflicts of interest, I would love to know that too. But your primary job is to know how your management teams get paid and what their incentive comp is linked to.
I have a question in turn, like a theory type question.
Yeah.
In terms of board of directors compensation, what's your take on board of directors? Like, when do you consider them to be overpaid, and what are some of the conflicts that go along with that?
I think we have a problem with boards of directors being overpaid for almost all companies, just kind of the way that our system works today. You've seen salaries for boards of director positions go up and up and up and up over the last 50 years. And there's all sorts of conflicts of interest that are embedded in serving on a board, because most of those positions are rewarded as a result of some strategic interest or crony capitalism, or maybe they have another company that they're currently serving on a board of. There are there are software programs that will map out all these relationships, and they're fascinating because you'll see the same people serving on many, many boards, and well, it's clubby. It becomes clubby, and there's lots of conflicts embedded in there, and that's one of the reasons why I encourage you to read the proxy. Is oftentimes you'll see those conflicts explicitly disclosed. So, my opinion, I'm just the one guy who's watched those salaries climb significantly over the years, and I don't think most of them are probably worth it. I'm attracted to the European model. The European model generally includes board of director positions that are inhabited by not just the shareholder base. So in the US, a lot of companies appoint their boards based on their relationship with the CEO and the management team and other large shareholders. Okay, great. Well, in Europe, what you're going to add to that are board of director positions that have been elected by various stakeholders. So maybe the community, maybe the employees, maybe some other constituency associated with sustainability or even the environment or some governmental body. It's a much broader and well-rounded approach, not just to shareholder governance, because it's not all about the shareholders, but community governance. And you see that approach kind of embedded in some of these ESI type of metrics, or SRI, social governance, and environmental type investing. It's the fastest growing investing field in finance. 1 in every 6 new dollars flowing into investment right now is going into SRI related funds. So I don't know, that's my soapbox. I don't know if that answered your question.
Yeah, no, it does. I was just looking at it, I'm like, all right, this doesn't feel right, but I don't really know what I'm basing it on. So I mean, I guess that's probably just like everybody's probably going to look at the same thing and say, okay, they're making $250,000 a year just to
go to a couple of meetings. So that's what you need to do. That would be my advice to everybody on this call, is to try to get a job working several boards of directors after you graduate. So if you, no, I say that a little tongue in cheek, but when you're trying to find a frame of reference for that, you want to compare it to history, see what boards have historically been paid, and then you want to compare it to the industry, see what boards in the rest of your industry are making, and then you compare it to global companies. And the U.S. kind of leads the way in board comp, and it's higher than historical too. So I mean, you see that's all over the news these days. You stratify the income to the 1%, right? Well, I just saw a graph this week, and I see this monthly in a variety of forms showing the percentage of income that accrues to the 1% today versus where it was in 1950 or 1900. And, it's been on a steady trend higher. And that's not, this class is not meant to define good or bad, but it is meant to define higher or lower. And we see these trends, and we know that it is going higher. So then we all get to go and vote and decide, is that the path we want to continue?
Yeah.
I have a question.
Yeah.
So after grading the proxy, will you provide feedback? So I did it, but I'm not sure if I have the right frame of mind, and I just want to make sure that I'm thinking the right way before moving on with the research paper.
Yeah, I'll take a look. I probably won't provide feedback for everybody in class unless they're deficient in some regard. But if you want me to specifically take a look at yours, yeah, I'll pull it up and give you some feedback beyond.
Thank you.
Okay, gang. Well, I'm going to reboot and see if I can't get out there to that Thompson one. Sounded like I forget who it was, but they alerted me to the fact that even if my Internet Explorer was working, I might not have been able to log in because there's a limited number of logins. So what I want to do is find a time when I can get in I'll try to shoot a little video so that you can come back and watch the tutorial. But you're all tech savvy. I showed you how to get out there to the link on the database, so you can click on that yourself and go out there and start playing around with it. Just type in your ticker. You're going to get a bunch of news, a bunch of ratios, a bunch of common size financial statements, and a bunch of Wall Street analyst reports. And one of the menus is going to say corporate governance. So click on that menu and see what comes up. It's not this. I mean, it's not. There's no secret to it. It's just a really powerful database with some really cool toys. So check it out. And that's all I got. So I will say good night to you. And
I have a question regarding
Travis.
the itinerary for next week and the holiday.
Thank you. I was just getting ready to say that next week was Labor Day, so we don't have any class. The following week is we're just going to have a recorded lecture. I've already posted it out there for Module 3, so check that out. And then we'll meet for a live Zoom call again for Module 4, and that's perfect timing because that's right before our first exam, and I'm sure everybody will have a bunch of questions about how those exams are going to work. So I'll run you all through that and try to post the sample exam between now and then, which I've already put it out there on Canvas. I just haven't put the one out there on mybusinesscourses.com, but you can expect those to function just like the homework functions, only they're multiple choice instead of kind of question format. Okay, there was one more question. Could you explain question 3 in module 1 homework? Why did PricewaterhouseCoopers provide it as unqualified? Well, I haven't looked at that, but an unqualified opinion means not qualified. So the qualified opinion is the bad opinion. You don't want a qualified opinion. When the auditor says we have a qualified opinion, it means that everything looked okay except for this one thing, and we're going to qualify that, and then we're going to give you additional description or language about why it might be a little different from your generally accepted accounting practices. And that's called a qualified opinion. So when you get an unqualified opinion, that basically just means that everything checked out. Nothing was wrong with it, which is good. So you ask the question, why did PricewaterhouseCoopers provide it as unqualified? And the answer to that for any company that receives an unqualified opinion is always the same. It means everything checked out. So that takes a little while to get used to that language, because unqualified, well, it sounds like you don't know what you're doing. If you're unqualified for something, it means you're deficient. Well, this is the opposite of that. When an auditor issues an unqualified opinion, it means everything checks out. It means you're good. If they issue a qualified opinion, it's the other way around. So, good question. Don't beat yourself up for thinking that sounds weird, because it does sound weird. And I think that's a big part of the key to our profession, is that we keep ourselves employed with a lot of nomenclature and verbiage that is really not that complicated, but unless you've been through a class like this, it doesn't always make sense. Anything else? Okay, then. Well, have a great Labor Day. I hope it's time. I hope it's good time off for whatever that means in this new era. Go out, get you some R&R or a little time away from class, and then we'll meet again in a couple weeks. Thanks, gang.
Thank you.
Yep. Bye now.
Thank you.
Thank you.